to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello again, everyone. Thank you very much. The interneting? I don't know what the hell we call this. But anyway, this is attempt number 2 of our daily brief broadcast for Friday, 21st of September. What is it? 21st of July. I don't know why I thought September. Anyway, I'm a little frazzled right now because I was basically right in midstream trying to teach you guys options expiry and all that, and the whole damn video just went to pot. And unfortunately, I'm one of these type of guys. It's probably maybe a little bit of autism on my part. But when I get frazzled like this, it's very hard for me to pick the pieces up. So I'll try again. Today is Friday. Like I said, it is the monthly options expiry, 21st of July. Maybe we can somehow salvage that previous video and clip them together, but that takes a lot of editing, and I don't think our staff has the time to do that kind of stuff. So anyway, a whole bunch of nuggets of wisdom lost to the ether there. I was mentioning how, and actually anybody who was on the live stream that was able to piece together that butcher job, thanks Comcast, YouTube, and whoever else is in charge of all this. It feels as though they would like to take the market out here, probably somewhere around 457 or so. If they could, like 457.01, that would be like a monster home run. For the options writers, especially the put options, and they probably don't want to let the market go out above these two strikes here, 450, 460, excuse me, 459, 460. There's a lot of open interest there. It would probably be in their best interest to have those options expire worthless. So I spent probably about 15 minutes trying to describe all this in the previous video, so I think we'll just leave it at that. And thank Google, YouTube, Comcast, and all the interneting jerks for screwing us up there. But anyway, let's move on. And you can kind of tell in my voice. When I get all pissed off, the tone of my voice changes. And so, anyway, I was Mr. PMA first thing this morning, but not so PMA now. Trying to be the demonstrator of best practices for you guys. And actually not a bad week. Clipped the market for a few ticks here. Not a heck of a lot of trades, just a couple. But was able to get a half decent trade off there in gold halfway through the week. But on balance, today, first and foremost, pretty light news day econ-wise. We had, first thing this morning, consumer confidence come out in Spain, better than expected. And I'm hearing that the tone of the European economies is a little bit better. Yesterday, UK retail data came in a little bit better than expected. Interestingly enough, and I'm not quite sure why, but it turns out my country had a bunch of econs that came out here first thing this morning. I wouldn't say they're anything to really to write home about. And actually, it was interesting. I was talking to a gentleman who owns a house out by where my son is currently residing, and he said that just in his local neighborhood, prices have come off about 20% from their peaks seen there last year. So the fluff in the Canadian housing market is finally coming off, I suppose, with all these interest rate increases. Is that interesting? I'm holding up Sharktoshi's mug. Sharktoshi sent me this this mug a year or two ago. Geez, actually, might even be a few years ago. Isn't that cool? He actually got a mug, actually drawn a PMA for the win. That's so cool. Anyway, that's kind of funny that I'm drinking out of that while bitching about YouTube and Comcast and their horrible services. And they charge us, I mean, Google charges us fucking a fee for super accounts, and yet they still screw us over. But anyway. So anyway, back to our story. So the Canadian data, not really anything to write home about. Uh, and then sort of, overall sentiment news this morning. In fact, I think there was your headline: retail sales growth beats forecast. I think that was like yesterday's data though. If we go to our economic calendar, uh, yesterday, Thursday, there was the UK data, a little bit better than expected, month over month, and the market was looking for an absolute train wreck, and it came in just a slight tick down. I would say on balance, though, we're probably going to be going through a bit of a slog here as the consumer is going to be pinched here. But, as the central bankers try to sort of gain control of the system again. Interesting seeing that natural gas prices are being bid up there over in Europe. Of course, Mr. Dickhead over there in Russia is causing more headaches for people of Ukraine, and specifically Odessa, these poor people. Interesting how they have wheat. They keep talking about wheat prices getting bid up. Interestingly enough, though, these markets are not really actually rip-roaring bulls. And if they do get to the point where they're rip-roaring bulls, then oh boy, all hell's going to break loose in our society. I actually do like the idea of buying natural gas down in here. And I think I even did put a tweet out yesterday to that effect. Buying when they're crying. I do like that trade. With this trend line, I think that's your primary signal. If we get this W come in, keep in mind this is a weekly price chart. But if we get this W to come in here and we accept above value here, oh boy, this is all open air. And we've talked a lot about how, I don't know whether usually this takes a while to turn. I like the idea of coming in here and bargain hunting. And as you can see, I did pick up a little bit of this natural gas ETF down here at the bottom end of the range, but I don't know whether it's actually turned just yet. It's probably goes sideways for another little while. But having said that, it's interesting how like the news headlines will try and get you to think that all hell's breaking loose and it's the end of the world, but really, this is really nothing. It's not really a hell of a lot going on down here. Anyway, I do like investing in that name there, though, that's for sure. As you can tell, I'm a little bit flustered here. But anyway, the only econ that came out today, like we said, was the Canadian data. And if anything, I've talked about this for quite a while. FYI, Canada is a short. I still think it's a short, and it will be for the next like 10, 15 years. In fact, I might make the argument that this was actually the cycle pivot here. But because of the way the Americans cook the books with all their U.S. housing crisis, and then, the sad thing is Canada did quantitative easing, but there was no reason for Canada to do quantitative easing, and so as a result, we have hyperinflation here, where fucking a single family home is $1 million Canadian dollars, which is just absolutely stupid. I mean, just think about this. If you have kids, your kid growing up and wanting to start a family, and where and what kind of environment are they going to raise their family? Your grandkids, just image that. I mean, what kid coming out of college and starting a family can afford $1 million for a house? I mean, it's insulting. And the direct reason for that was because Canada went and just turned the money printers on when there was no housing crisis here at all. I mean, there was no justification for this whatsoever. So anyway, it's a sad commentary on how corrupt this whole world is, and the stupid banks are crooks. So, having said that, in the short term, maybe we have a bit of a bottom here in the Canadian dollar. I don't know. But Canadian housing data or retail data is pretty soft. The housing market's still pretty strong. And actually, my buddy that I was speaking out in the suburbs there yesterday, he had a theory as to why the Canadian housing market is the way that it is right now. And it's very tinfoil hatty. I mean, just stunning. So it's interesting that you just talk to people on the street Just this guy doesn't know anything from Adam. He was just out there cutting his lawn with his lawnmower and stuff, and I was just chatting with him. And just listening to the way that just average Joe citizen sort of perceives the way our governments are operating, it's a really sad commentary on how badly this whole shit show is going. So, as I've said before, Canada's a short. Probably avoid Canada like the plague if you can. And if you are in Canada, just try and do everything you possibly can and don't take too much debt out because this has just got trap written all over it. But anyway, it is what it is. All right, so econ wise, not a hell of a lot to really go over there. One thing actually that really jumped out at me, which was super cool, was we teach a lot of options trading in our advanced programs, level 3, level 4 now. Here's a really good example where this was meta stock about 3 or 4 days ago. One of our advanced students had pointed this out. This is this is volume, and this is open interest. This is on meta on the 310 put options. So on this particular date, right, 7/18/23, somebody went and bought 31,000 310 put options on meta stock. And previous to that, there was only 1,400 in open interest. So do you see how corrupt this whole system is? Somebody clearly knew something was going to happen here. 31,000 put options at 310, give you the right to sell the stock at 310. That's 3.1 million shares. 3.1 million shares. That's a lot of freaking shares. And what a surprise. Look how meta is just coming off like a gangbusters now. Just the intrinsic value on that option right now is already the better part of $18, $17, $18. And this option right now, because this has to reflect actually the margin cost to actually margin this position from 310, that option right now trading in the open marketplace is about, I think it's 20, 27, $28. So somebody clearly knew something. And this actually is a concept that we teach in our level 3 program. And the irony of it all is for all our level 1ers and our basic people to introduction to investing, trying to understand trade location. And of course, everybody knows 78.6 is Brian's favorite fib. A huge gap. How often do gaps get filled in? About 90% of the time. We were above value. We're coming into the original market structure top. So this is exactly where you would want to short this. So it's just fascinating how using options data to validate what we're seeing on the price chart just gives you just an absolutely incredible edge. And if anything, this right there is worth the price of the subscription of, our education program just to learn this and understand what the hell's going on in the marketplace. So not a surprise whatsoever to see stocks like Meta and stuff coming off here. And what's interesting about this trade was that I think it was yesterday somebody had announced that, it turns out that NVIDIA isn't making nearly as much money as everybody thought they were. And lo and behold, and the cool part about this is I'm sure you all know how this goes. But what are we supposed to think if we ever see the market smiling at you? So in a weird sort of way, you can see up, down, back up, did not make a new high, and now we're going through those lows. So we're finally actually getting a sell signal on NVIDIA, which I guess kind of makes sense because this stock's just gone way too far, way too fast. And it's so ironic because the headline is that, actually, the street was looking for them to increase revenue by like 50%, and it turns out that they're actually going to have a 10% decline in revenue. But just like we said about Meta and Facebook, who can tell me what is the statistical odds that that big hole on the chart is going to be filled in? We all know the answer to this. And interesting enough, there's the top of value. And, if we do fibs, what a surprise. There's the 200 period moving average right up against the mountain man level. So, I mean, it's stunningly cliche how this stuff all works. Anyway, so we're starting to see a little bit of the stupidity of this bull market in tech stocks starting to unwind. And as I said there just a moment ago, it turns out actually there were actually a lot of tells that the smart money knew what was coming down the pike here. Like I said, this just happens to be one example, but look at that dramatic sell-off here. And how do you explain that? And especially in the face that the smart money was actually loading up on the puts. So, anyway. I'm a bit flustered because all of my regular routines sort of thrown off when Google and YouTube and shit goes and does all this stupid stuff to us. So I don't know whether I'm even going to give you a half decent report here today. Sorry, everyone. Bigger message has been sort of the message all along. The US dollar index got absolutely smoked here while we were sort of in that window where there was no real sort of drivers in the marketplace. There's a bit of a vacuum. As we're getting closer and closer to an FOMC event window, they're sort of cleaning up the technical picture here. And interestingly enough, this is one of our site OGs. He really likes this concept called his dump chaser zone, in this case, 38.2 to 50% level. Colin, right? So, and I like making all of the site users famous. If you got good karma, I will make you as famous as I possibly can. And so I like the concept of calling this Colin's dump chaser zone. So when we were down here, I was putting out tweets, be careful, don't get too US dollar bearish as we're heading into this FOMC event. They'll probably want to square up the books. And just the interesting thing now is when this event actually happens, now the market's no longer oversold. So you might find that actually coming out of this FOMC, we start another big leg to the downside. I mean, you never know what's going to happen. I wouldn't suggest getting in the business of predicting. But I think what ended up happening there was the market got a little bit too oversold and they had to clean the market up. And you can see we just hit two very significant technical objectives here today. And now I wouldn't be surprised over the course of this coming week, because keep in mind the FOMC meeting is going to be next, I think it's like Tuesday, Wednesday, with the announcement on Wednesday. And every time they do one of these FOMC meetings, it's a lot of fun. We throw up a free public broadcast, and then we throw the Fed the press conference after the announcement. And we have a rule, of course, don't trust anything for the first hour following the Fed announcement. So it's fun to watch Chair Powell go through his nonsense speeches. And frankly speaking, I think he should not even have the press conference. Alan Greenspan, who is probably one of the only Fed governors that I really respect over the years, him and maybe Volcker. Granny, when she did the job, that was an absolute train wreck. And Bernanke. I mean, I hope you all realize basically Ben Bernanke justified basically mortgaging all of your children's future to save that generation's asses. The whole baby boomer generation, they basically just mortgage our future so that they wouldn't have a Great Depression when they were supposed to have a Great Depression. Now we all have to live in this hyperinflation world thanks to all those assholes. So I don't have any respect for, and Ben Bernanke says, well, I'm an academic, right? And also Granny there. These people don't even live in the real world. I absolutely detest any university people that come into the marketplace and tell you the way that the market works, because none of them have any skin in the game. And anybody that's sort of a career lifer that works in like the Fed or something like that, they don't have any skin in the game. They've got guaranteed salaries, guaranteed pensions. Those pensions, of course, are indexed to inflation because, of course, they know full well that the bankster crooks, 1% oligarchs, are cooking the books. And that inflation is nothing more than just a function of what they're doing in the marketplace to make sure their business models continue, just business as usual. So I would strongly suggest you don't take economic advice from anybody that works in a university. They are the worst traders ever. Anyway, that's bark. The point of the matter here is I think the market got a little oversold. They are correcting it. And the interesting thing is you could make the argument that maybe the stock market got a little bit overbought. You know, you look at this crazy stock market. Does that look sustainable? What I'm worried about here is this September, October, they're setting up a crash scenario here. And just like 1987, it's totally the same. Check this out. I don't know whether I'm totally heading off on a tangent here, but what the hell? It's Friday. But, you know, 1987, people always label 1987 as some sort of big crash when really it wasn't. And ironically enough, so many of you are alive now in the marketplace. You probably weren't even participating in the market in 1987. But anyway, here is 1987. They called it a crash, right? Crash of 87. But the irony of it all is all it was just a 50% retracement of a very, very overextended market. And I have a sneaky suspicion they are doing exactly the same thing all over again here. What I guess I'm worried about is we might even be sort of like here, and we still got another year or two of just absolute stupidity ahead of us here. So, I mean, I don't know. Does this ABCD its way up here and set up a crash scenario? I don't know. Tough to say. But anyway, I don't even know what. Wow, I am totally thrown off here today. That's too bad. I always like to try and give you guys a half decent report. Anyway, the good part about it is in the after party here today, we were going to have our buddy Colin actually come in and review a little bit of crypto names with you guys. So if anything, consider this a pitch to come and join our crypto conversation. With regard specifically to crypto, I get the impression that this was pretty much a hurry up and do nothing kind of week. We are still painting lower highs and lower lows, so nothing's really changed there. We did have like bearish bot setups. They had move stop to scratch level hit, and then the counter trend rally stopped them out at scratch. So manual traders, I think, are still sitting on the sidelines. I still think that this high to low trend line here that was defined quite a while ago, that key pivot low to this key pivot high, I think that still dominates sort of support and resistance in the marketplace, which means we could actually run a few more liquidity stops here. It wouldn't surprise me. But at the same time, too, if we want to finish this harmonic pattern, key support in the weekly SMA, you can see them. There's a whole cluster of them. There's also this primary trend line off of the peaks, that high and that high. That actually, I think, acts as support. And there's the 13 EMA on the weekly chart. So if we go back to that lower time frame chart, 13 EMAs right up in here. And again, there's Colin and his, in this case, the pump chasers sitting down there waiting to buy. So right now, and it's been the message the whole week that this is just a hurry up and do nothing market. Not really impressed with buying or selling. And on a weekly basis, this is an absolutely horrible trade location. We have a shooting star here on the weekly basis that has confirmed. So there's lots and lots of supply available if price can get back up in here. You would imagine there's a whole bunch of trap bulls up here that would love to get out. And you can see where moving average and trendline support is. So I would actually call this no man's land right now. So lower, I suppose we'll finish off this free broadcast. We are heading into the weekend. So let's go take a look at altcoin land. Things are looking a little heavy, a little bit more red on the screen than I'd like to see on a regular basis. And, you know, kind of what you see, this is one of our site OGs, one of his preferred names. You can see an M just came in there. So it looks like things are a bit heavy here. You can also see a little bit of a probably bear divs. These are off of daily charts. This is another name that we're kind of interested in here. In fact, actually, where's our divergence? There we go. Oh boy, look at all those divs. So as long as we have all these divs working, our rule around TRI, of course, is, if you see bearish divergence, well, maybe just cool your jets. So I am seeing quite a bit of that. I'm also seeing too, actually, this is good to see, you know, these very popular names kind of consolidating. We could get maybe a nice FU, and you can see all the potential bullish divergences that are trying to form here. So kind of a mixed bag. I did see there were some names that were popping up here yesterday, like this guy, and boom, as quick as they put the bull in, they start taking it back. If anything, an image like this is the reason why you absolutely cannot chase. You all see where the W is down in here. Had you bought this thing at 42, boom, you get sell half on a double up here. I mean, hell, if you're really lucky, oh, we just missed a second double. But there's no, if anybody actually bought this thing where you were supposed to buy it, you should be sitting on a free position right now. And really, you're just watching the fireworks right now. And sadly, of course, this is all the public come in, FOMO buy. And of course, now they're dying 1,000 deaths. So, I mean, this is the hallmark of venture capital. Anybody should look at that chart and go, well, is that sustainable? Probably not. And if anything, if you wanted to join the party here, what I would suggest you do is you draw your reload zones, boobity boobity boo. And if you're interested, well, you can see they've almost brought it back down into an area where we can start thinking about buying again. So I see a lot of this in the marketplace right now. Yeah. Did either of our buddies show up here today? Doesn't look like it, eh? So, yeah, 9:45 here. In the second version of this video, did I talk about the econs in the news today? I don't even. I'm so flustered by all this. I don't even know what I did here today. All right, good. All right. So anyway, the point of the matter here is I think that being a big monthly options expiry, I think that there is incentive for them to take the market out at very specific levels here. Being the monthly expiry day today, things like the stock market, you're probably going to see it fairly calm. Yeah, look at that. Look at that. I mean, how often do you see the stock market move 0.0 or 0.1%? And if anything, that's a perfect analogy of an options expiry day. And notice how they're just washing it back and forth, back and forth. Below value, the pros come in and buy. Above value, the pros come in and sell. And just back and forth, back and forth. I suppose to finish off this video, I was interested in hunting along on crude oil this morning, but again, sort of same options expiry. I did have this interesting bullish bot set up, but you can see we ran, this was the euro close. So we ran up, we tagged move stop to scratch, and boom, we came back to scratch, big hurry up and do nothing day. So once again, that's probably the hallmark of an options expiry day. And if you've never heard that before, again, write it down. Third Friday of the month. Most of the business is done on the 20th, the Thursday, not necessarily 20th, but the Thursday prior to the options expiry day. And then on options expiry day, that action is actually usually a big nothing burger. And so as a result, I really haven't done a hell of a lot in the market today. All right, I don't know. Hopefully I gave you something to chew on there. We'll go over and hang out in the after party. There were a few names that we still needed to take a look at from the Daily Brief request room. If you do have a name or two you want me to look at, we were going to get a report on excuse me, from the guys from Hero, being Friday. Fridays we like to have on special guests on the after party, tell them a little bit about what they're doing in their community and how things are going over there, and if they happen to see an idea that we might be interested here. So hopefully maybe we have them. If not, maybe it's going to be a short session. I'll just do some AMA stuff, and we'll bid you adieu. So, all right. Well, anyway, PMA for the win. Slow and steady win the race. Just like Joshua tells you here. Try and keep that in mind. And actually, Joshua is such a great PMA guy. It's good having people like that. I mean, he's almost like chronically PMA. So I love having people like Joshua in my life. Try and keep me on the straight and narrow. All right. All the best. Maybe we'll see you for broiler chickens on Sunday. YouTube won't screw around with us like they do, and we can get off a half decent show for you. All right, all the best, and bye for now.